A fine morning to you. Good morning. Good morning. Complete silence. I'll try that again. Good morning.
Good morning.
That's more like it. Very good morning to you. It's wonderful to be back here on the second and final day of a GBF, and what a conference. I mean, all I can say is, and I will seize this opportunity, we should give a warm round of applause to the Dubai Chamber of Commerce for putting on what has been a spectacular conference. Now, due to significant lobbying, I tend to get the best panels at this conference, and today is no exception. We're talking about funding African business, deal makers, not risk takers. And I've got a great panel here to discuss that. Ashish Thakkar, in the middle there, is the founder of Mara Group and Mara Foundation, and Ashish has driven the growth of the company from a small IT business in Uganda to the globally recognized multi-sector investment group that we know as the Mara Group. You also are resident here in Dubai. Ashish Thakkar, round of applause, please. Rob Hersov, who doesn't know you? Everyone knows Rob Hersov. Rob's the founder and chairman of Invest Africa. It was founded with the specific purpose of delivering on the high demand for high quality relationships with growing African markets amongst the business community. Rob is here. You've moved to Johannesburg fairly recently, right? Because you were in London for a long time.
Cape Town.
You're in Cape Town right now. And by the way, as you can see, Rob is flying with one wing. Apparently, he injured his arm signing very big contracts, apparently.
Yeah, but you should see the other guy.
Yeah, actually, it's just a sympathy thing. He's absolutely fine. And finally, my brother from Nigeria, Eghosa, Omoigui, who is the managing general partner of EchoVC Partners. Now, you're the general partner for EchoVC, which is an early stage and growth stage technology venture capital firm, which bridges Silicon Valley and underserved emerging markets, particularly in Africa. So you're very welcome, Eghosa. And I noticed Eghosa is wearing a very different microphone from the rest of us, because apparently this one didn't fit on his small ears. That's what I heard. That's correct. But he's a big listener. So, so anyway, listen to this. We're talking about where the money is. Let's lay things on the table. Let's put away all the acronyms and the highfalutin language in investment, and let's just talk about money. Where's the money? There's the first question everyone's asking. Where is the money? Rob, where's the money?
So we look at it in the following way. There are private investors, family offices, funds, institutions, and corporates. And within institutions, you have the DFIs, the sovereign wealth funds. But if you take those 5 categories, the most mysterious category, the hardest to reach, are the private investors and then the family offices. Everyone knows who the funds are, the Abraj, Ethos, Helios, Actises, and everyone pretty much knows who the institutions and corporates are. But the private investors and family offices are the hardest to get to, and often they're the most important investors, I believe, for Africa, because they really are the risk takers.
And there's a culture, when you mention the word family, you've got the human element to it. You're talking about understanding the culture of things. We were talking about this, weren't we? About how when you talk about family investment, you're entering a whole new dynamic, are you not?
Correct. I think what you have is, as an investor engaging with a family office or family business, you have to sort of be cognizant of the potential for both a cultural match and or mismatch. So that's always a sensitive topic. But the best part about the family offices, family businesses, is that they're usually created by operators who started companies. So if you're in the business of investing in companies, they become very valuable as muses or guides or mentors for that.
Let's talk about where's private equity right now? I mean, from what I understood, private equity saw a big jump in around 2000. Well, this year really, 2016 saw a slump. And I was looking at the figures, PE money that's flooded into Africa these are the latest figures, between 2010 and 2016, private equity firms invested around $25 billion into the continent. I want you to paint a picture, my 3 wise men, of what private equity is doing right now in Africa, where the money's going, who they are. Demystify this for us.
So I think, the critical thing is, firstly, when you look at our heading of deal makers, not risk takers, I think we've got to change that definition of, the definition of an entrepreneur is a risk taker.
By
I
definition,
think what we require as Africa particularly is more entrepreneurial capital. I think when you think about the private equity side, to your point, there was a lot of capital coming in earlier, and there still is. My biggest concern is when PE overpays for certain assets and then cannot deliver the results in the end. It's going to hurt brand Africa as a whole.
And you think that's happening in Africa then?
I think it definitely was happening, Mark. It definitely was happening. I think naturally over the last 2 years or so, it's less so. But I think more importantly, we've got to start getting rid of these terms and typical phrases. Venture capital, everyone thinks venture capital is a few $1 million, and Eghosa has a great story to that. But I think we need to start thinking about, we need capital, large amounts of capital that will come into our continent and help scale up early stage businesses, but truly scale them up within countries, but also across the continent. And I think that's what's going to be game changing.
Eghosa,
Yes.
Ashish says venture capital needs to be redefined. Is he right?
I think he's right. I think what you find with a lot of the, what we call the SMEs, which I think for a lot of people, it comes with some sort of derogatory snare or some sort of pejorative sort of definition. I think SMEs are the engine of growth for every economy in sub-Saharan Africa, and that's typically true even in other markets. But you have sort of a complete mismatch right now. You've got a lot more money flowing into the private equity funds that by and large tend to want to write $40, $50 million checks. A lot of the companies that are available are not either willing or capable of absorbing that kind of capital infusion. So you have to grow these companies, but then that requires a lot of work.
Why are they not capable on most of the time?
Well, I think a lot of it is just really capital structure, and then of course, scaling is in many ways, I think, an opportunity that very few folks are sort of designed for. You have to go in there and sort of restructure things before you sort of really start to scale. And then what then happens is, everybody talks about scaling companies and scaling sort of infrastructure, but you also have to scale the humans. And what you find is that the entrepreneurs tend to be a lot more afraid because they don't want to get to a place where you sort of discover that, the emperor's not wearing any clothes, right? and so you have to grow them, right, as leaders and as managers and as people. And so I think, there's a lot of things that you have to do, and I think you're better off doing it when the companies are smaller, because it's like trying to change your tire, running at 100 miles an hour. It's not impossible, but it could be really difficult. And so I think you have this mismatch. And the private equity firms are looking for large infusions of capital. So what then happens is that there's a much smaller pool of companies. So then they bid that up. And so, I was talking about it, where you're seeing evaluations where you will need godlike execution to return 1x.
Which means that you failed before you started.
You started, correct. And that's a problem.
But there's also, in a lot of countries in Africa, there's a disincentive to scale. And it's driven by governments, because the minute you get big enough, you need to be taxed. The focus comes upon you, and it's not a good thing, because we need companies to scale. The real action in Africa is the $1 to $10 million investment. And it's where EchoVC, for example, is operating, and it's where the Mara Group began. And that's where the real action is. That's where we need the money to get the businesses into revenue, into distribution, into growth. And then at a later stage, maybe the private equity firms are the partial exit for these companies.
Go on.
I was going to say, I couldn't agree more with Rob. I think the future for family businesses, as being one, I can tell you from experience, and also for businesses generally to scale, I think we need permanent capital vehicles, right? So the challenge with private equity is a fantastic middle step. And to Rob's point, if they're buyout funds, it's a perfect exit strategy as well, partially. But what we do require is more permanent capital vehicles that you're not building something to sell. You're building it to grow, you're building it to keep. There's a complete different DNA in a business.
It's a sustainable mindset.
Sustainable mindset, and just the foundation's built very differently. If you're building a business to sell, you're never going to invest enough in the values, in the culture, in the foundation that really is required in order to create a real sustainable and scalable business.
I mean, I'll throw something at. So when we closed our first fund, which was 3 years ago, it was bone dry. The opportunity, people thought it was what they call the triple whammy. you're investing in Africa, you're investing in technology, and you're investing in the early stage. Like, why are you leaving Palo Alto? But we saw sort of the opportunity because Africa sort of was the last frontier for outsized returns, alpha returns. I mean, India and China had sort of shown that, and Africa was just there waiting.
But it looked very risky to the outsiders.
Right, but I just did an interview and I was talking about how people perceive risk differently when you're looking from the outside in versus when you're on the ground, right? And what you consider
that's Africa's challenge, isn't it? Right there.
Right. And I think we see that consistently. People conflate risk and uncertainty, or sort of don't understand risk. But I've always said this: if you don't understand risk, you'll misprice it, right? And so for us, we think that's the real opportunity as investors, because the perceived risk is mispriced in our favor, right? And so that's what you do at early stage: non-consensus opinion on a mispriced security. But I think what we see consistently now, though, is that the opportunities are legion. There is almost no sector that is not going to get disrupted by technology, by some of these new startups. The founders are dynamic, they're great. I mean, the government regulations and policies can be somewhat limiting, but these entrepreneurs are built to operate in friction, very high friction environments, right? And so that's what they do. They're really great. But the big opportunities right now are to sort of drive technology into healthcare, into financial services, into hospitality, into print.
Into government.
Into government. Even e-government is a big opportunity. So I think we're getting excited. But this stuff requires a lot of hand-holding and a lot of work. But yeah, I totally agree with Rob. In the smaller deals where there's less downside, your downside is 1x, right? You're not writing a $50 million check and it's going to go away. But we think that the small checks are sort of really where it is.
Can we stay with that idea of the opportunities, where they are, how big they are? And I want to bring Rob and Ashish in. Where are those opportunities? Give us some examples. In fact, as I say that, I can imagine people in the audience whipping out their pens and their papers, going on. Okay, we're writing down a long list of the stuff that's out there. Demystify this for us. For investors, where are the opportunities? You can be country specific if you like.
Yeah.
Well, I just want to talk quickly. Everybody says, Africa needs power. We all agree with that.
Check.
Yeah.
Electrification, and Africa needs infrastructure.
Yes.
But Louis van Pletzen, the other night at dinner, when we were eating 1.5 meters of meat, 4 of us, delicious, said digital infrastructure is by far the most important.
That's what he was most excited about.
By far the most important is digital infrastructure, because everything's driven by your smartphone, and your light. The light in the house, you educate your children. The smartphone, you can order things, you can create things, and that digital infrastructure is where we need to be investing. And I know we think ports, roads, airports, yes, but we must be investing heavily now in digital infrastructure. Right. It will change our continent.
And do you think that domestic investors, because there is money in Africa, to go into Africa, are a bit shy about stuff like that? I mean, I was with the governor of the Central Bank of Nigeria on Friday in London, at the London Stock Exchange, and Nigeria feels like it's turned a corner, that it's come out of this, the eye of the storm. And we'd like to think so. As a Nigerian, I'd like to think so. And so there's a bit of a rallying cry going on. So he got on stage at the London Stock Exchange and he said that domestic investors need to be more of risk takers. That if Uber had been a Nigerian company and had been sourcing funding, Uber wouldn't be Uber, because nobody would put things in. They'll put it into a port. They'll put it into a fast-moving consumer goods business, a supermarket, but they wouldn't put it into a taxi company with no taxis, and that we needed to be more entrepreneurial and move with the times. Is he being fair? And if so, is that something across Africa, that basically we're not risk takers as domestic investors?
He's challenging investors who, by definition, invest by way of pattern recognition. So if all you've done is ports and malls, and you want to have someone invest in digital and intellectual property that investor cannot see, that's a gigantic paradigm shift, right? So it's probably not very fair. But at the same time, the pattern recognition holds a lot of opportunities back, because the truth of the matter is investors who've done this elsewhere come with their own calcified pattern recognition schemes and want to invest in entrepreneurs that look like them and talk like them and have the same background as they do.
That smell familiar.
Precisely. And what it's worth, that's what it is. But we've invested in companies where 2 years after the fact, people who look, domestic investors who looked at the same companies, I'll give an example, Printivo.
Yes.
Three-person company, super interesting, had done $9,000 in total revenue.
Yeah, you did that one recently.
We did that actually 2.5 years ago.
What do they do?
Printivo is essentially the Vistaprint for Africa. So what they've done is created an online print platform that allows you to go online, don't talk to anybody, create a design, order it, pay for it, and have it delivered to you.
Yeah, great for SMEs.
But absolutely great for SMEs, which is a gigantic opportunity. But I remember talking to investors who said, oh, you did that deal. What did you see in those small boys? Exact quote.
Yes.
Exact quote. 2 years later.
That's an African thing, right?
Oh,
there.
yes, absolutely. That cultural disconnect. But 2 years later, they're like, now, we have some high-profile investors coming to that company now. And people are like, well, how do we miss that?
Yeah.
But the question was, you didn't miss it.
It was there.
You dismissed it. You didn't miss it, you just dismissed it. Right? So this happens.
So that's the mind shift.
Exactly.
The mind shift
and so that shift has to happen. It'll take time, but you have to create new patterns.
Ashish.
So I think this is exactly right, that there is a bandwagon approach, right? That the people who do take that early risk will greatly benefit. And I think just to build on Rob's earlier point of digital infrastructure, I think that's the beginning. That's going to be the tip of the iceberg, because once you have that digital infrastructure, thinking about the fact that our continent is going to have 700 million smartphones within the next few years, it's going to change the way our people live.
And 1 billion smart people.
Exactly. We're going to change the way we live. It literally is going to change the way we live. We've seen it in a small example with mobile money and how that's boosted our financial inclusion. Now we need more of the lending and everything else to take place through that. But from healthcare to education to agriculture to trade to truly enabling commerce is going to be game changing. Right now, somebody in a village trying to sell even to the capital city of that country is very challenging. But tomorrow it's going to be easy to even do regional trade and Pan-African trade and then eventually global trade.
Now, we're here in Dubai, and the red thread that runs through the AGBF is, and you live here in Dubai, is that it's uniquely positioned, not just geographically, but also mentally to some degree, in terms of the way that Dubai is a risk-taking, innovative hub of ideas, to be a link between the Middle East and Africa. I wanted to just talk about that a little bit in regards to investment, say, for example. How much the UAE and Dubai in particular could help with the African idea, mutually beneficially, so to speak. So I mean, because, we've not heard a lot about that in this conference.
I mean, the two biggest capitals of Africa are London and Paris, still today, because of the Anglophone and Francophone history and the investments to date and the businesses involved. But Dubai is rapidly gaining on them, and Dubai has the best connectivity into Africa. It is by far the most innovative of those three capitals. If you look at this great velicopter, the drone taxis in Dubai, the 3D printing of houses, I mean, it's a very innovative hub. But I think in terms of capital markets, I think London is still by far the strongest. And when the American money focuses on Africa, they tend to place it with the KKRs and the Carlyles, whose head offices tend to be in London. So London remains the center. Dubai's catching up significantly. But Dubai represents Asia, South Asia, India. A lot of those trading businesses are coming via Dubai into Africa.
Yeah, this is the platform.
And you have the best airline for Africa.
Yes, exactly. For the best airline, I was about to say that it's just easy to get here.
Yeah.
I mean, sometimes I walk down the streets here and I think I'm back in Lagos. There's so many Nigerians, It's just
I would say something, Mark. I don't think the UAE is getting enough props. I mean, if I remember correctly, they're the second largest investor in Africa after China. I don't know if you know that.
I didn't.
All right.
And I think South Africa is the biggest investor in Africa, ahead of China.
Oh, but I'm talking about an outside investor.
South Africa.
So China, then UAE.
Outside of Africa.
Right. But it's fascinating because they're about 11% of total dollars, and that's remarkable. And I think no one is sort of like addressing that. But I think what the UAE and Dubai can sort of uniquely do is that they've shown historically the ability to innovate in white space, no pun intended. right? And so that is precisely the opportunity in many parts of Africa, right? And if you're able to sort of focus, and we've always believed this, and I think Ashish talked about it, it's less about countries, it's really more about cities.
And
It's less about
sectors.
macro, it's really more about microeconomies,
Yeah, it's about
right?
sectors.
But I think that ability to innovate in white space is something that can allow Dubai and the UAE to sort of catapult and become a true leader in creating some of these new opportunities in Africa.
I think absolutely right. I mean, when you think about the World Government Summit that Dubai has been hosting as well, Africa has a big platform. His Excellency Baumia was here for the one last year, did a fantastic job representing our continent as well. And similarly like that, there's a lot of stuff that happens here. The Dubai Chamber of Commerce, I mean, frankly, we've seen this event over the last few years, and this is just truly phenomenal. It's becoming more and more important, relevant, and truly global.
It's pretty cool.
It's brilliant. And so I think this is just an example, but I mean, in terms of migration, in terms of, getting visas for our people across the continent, for flight connectivity, as we've said, the previous trade hub, but also it's very inspirational. I mean, a friend of mine has just become the Minister of State for Artificial Intelligence, right? I think so.
Is there such a thing?
There is
Yes.
now, as of last week, yes. And I mean, it's truly phenomenal.
We should get that in Nigeria.
That would be native intelligence.
Native intelligence.
That's the opportunity.
No pun intended.
All right, guys, let me ask you a simple question. Outside of your own business and your own sector, what's the sector you'd love to get involved in, but you don't have time to? Where would you put your money? Rob.
So somebody presented an idea for micro insurance to me 10 days ago, and I was absolutely taken by it.
Micro-insurance?
Micro insurance. He's launching in Zambia, $1 a month, $1 a month, and life insurance. And if you die, you get your family gets $550, and you can skip a month, but that's not the month to die in when you skip a month.
Yeah.
But I just think that's
choose your
incredible
month.
because to have the breadwinner in a poor family in Africa die is devastating.
It's devastating. It's a
catastrophic.
game changer.
So
Yeah.
microinsurance, bring microinsurance to Africa. I just love that idea. I'd love to, if I had the time, I'd get behind that in a meaningful way.
Yeah, and the philosophy of it, of course,
Yeah.
is just that's just one manifestation of a philosophy. I mean, it's the packets of water we see on the side of the road
Right.
that they sell because you can't afford a bottle.
Correct.
They're just to quench your thirst. That's a brilliant. Ashish, how could you better that? Microfinance. You're in
Microinsurance.
Microinsurance. That's a tough one to follow, Ashish Thakkar.
It's always tough to follow Rob. But,
Always, even with
think-
one arm.
I think the key opportunity when you think about it across the board, I mean, we have the most naturally rain-fed arable land, right? And yet we're still exporting our commodities and not really value-adding,
Yeah, and we're importing
processing.
$35 billion of food a year.
Finished product. So it's basically we're supplying the raw material, creating employment outside, adding value for them, and then bringing it back. So I think that, but in a micro way as well, in terms of how even technology is going to play a critical role. I think tech is just going to truly, truly change our continent. And I know we've been talking about it for quite some time as a continent. We've been jumping up and down about it, but seriously, in the next few years, to your example about those people who felt like they missed out,
Yeah.
everyone's going to feel like they missed out on our continent because they're just not taking this digital opportunity serious enough.
Eghosa, you do what a lot of investors don't do. Early stage seed capital.
Right.
I mean, you're a young African with a big idea and big dreams. You look across the water at the continents, you look at Europe and you look at the Americas, and you envy the same guys just like you because they can find the money, they stand a chance. But if you're sitting in Kampala, Lagos, you're sitting in Nairobi, you're there with an idea and you're on your own. I mean, we had Paga, talking about payments, I had Paga on the stage yesterday, and he funded his business himself. Out of his own money. He worked, I believe, for Merrill Lynch and saved up enough money. Without that, he would never be there today. Right. Now he's the #1 payments, a fintech payments type company in Nigeria and expanding across Africa. But he did it with his own cash.
Right.
So essentially, what areas would you say you would be interested in if you had the time?
So first of all, I also did mine with my own cash, because I was considered.
You were at Intel.
I was considered a complete lunatic because they'd be like, so why you live in Palo Alto? Yeah, it's so many easier ways of making money. But this was sort of what I was born to do, and so I did that. But yeah, I funded that, and so.
So wait. When you said that you were going to go into Africa and investing from Intel, did people stop inviting you to dinner parties?
No, they were recommending me to set up sanatoriums, and because they're like, you are insane. But again, it takes 10 years to become an overnight success, so that's sort of how this stuff works.
Yeah.
But when I look at it, where are the big opportunities? We just announced an investment in a company called Grow Intelligence, and they are essentially premised to be the world's global balance sheet for agriculture. And what that has been interesting to me was it's African founded. But it has highlighted sort of the real opportunity around food, right? Certainly for us as investors, right? And understanding that Africa has 50% of the world's remaining arable land, but then you have all these dependencies, right? Suggests to me that while people talk a lot about agriculture and farming, that we're going to see more and more of that actual activity, ranging from actually improving production and yield to actually financing production and yield, right? And we're seeing sort of very interesting things around crowd financing, farm production, and the like. So if I was going to do that was sort of non-tech, right? I think those opportunities are going to be important. It's going to be important also to have the policies of government and regulations. I mean, Tayo was talking about how, his wife's mangoes get tariffed, just inside West Africa, whereas that shouldn't be the case. But, I think agriculture is sort of a huge thing. I think, it's like health, it's the only segment that has an addressable market of the global population.
Yes.
Right? And so not enough focus is being put in there, and I think it needs to be very targeted and very focused. But I'm very excited about agriculture. Not just because of the investment we made.
Are either of you making any investments, Rob, Ashish, in around agriculture? Are you putting any money into agriculture?
Primary agriculture is the future, but always will be, in my view. It's a very, very difficult business. So I'm not investing in agriculture. I think it's just too tough a business for me. But I like the sort of value chain, the full value chain. So farming to food. Right. I'm personally not investing in that area.
Yeah, so I mean, agriculture, healthcare, those are two things that we're not active in, but need to be disrupted and will be, and I think it's an area that we do need to focus more time on. But hence your question was, what would you like to do, but you just don't have enough time. So
yeah. So let's just talk about Brand Africa for a moment, because we've not really talked about. We're talking about the opportunities, but we also have to talk about the perception of Africa as a place. I took a big Scandinavian development fund, big $5 billion fund. Right? I took them to Nigeria, the CEO and his team, the agriculture guy amongst them. Never been to Nigeria before, and they're a 20-year-old fund. I took them to Lagos and I took them to Abuja, and they met with the central bank and the sovereign wealth fund and the sovereign fund of Nigeria. And I remember before I went, I sat with the agriculture guy actually, and I said to him, I gave my presentation, and this is why you should come to Nigeria. It's the biggest economy, and it impacts the 15 countries of ECOWAS and so on. So, and they all listened, and they're Scandinavians, they're quiet, they listened. And then at the end of it, I turned to the agriculture guy and I said, so do you have any questions? He said, I've got one question. What's our exit strategy when everything goes wrong? That's basically all he expected. And I just looked at him and, they were clients, so I had to be polite. But the muscle in the side of my face was clenched at the time, and I tried to demystify and said, no, that's maybe we should take a more positive view of things. But they were going in to Nigeria with such a tremendously negative view that they were going in with a no, trying to turn a no round into a yes. And that's what I saw when I took them there. And that was a real eye-opener for me because they have money. I mean, this is new money as well. So that was my experience in terms of trying to change the perception of Africa as a place for investment. You must uniquely, my three wise men, have your own experiences too.
There are 54 countries in Africa. 20 of the countries are doing the right thing and are investable. But we need Kenya, Nigeria, and South Africa to be trending in the right direction because those are the big engines of growth. And in my country, we have a terrible person, Zuma, running the country, and he's taking us backwards. And we need to get rid of him and replace him with a decent person.
I think you just did a tweetable quote right there, I think.
Put it up there.
I'll throw something there. The perception thing is, I think, is an important part. But I also tell entrepreneurs all the time, if you're going into a pitch meeting, the answer is already no. Your responsibility is to convert them to a yes.
Yeah, you have to be an evangelist.
That's it. It's a revival, right?
Sensibly.
And so, you know, your investors coming in with the no, that's normal, right? I think what happens though is that investors again are looking for signals, positive signals, and they're looking for, like I said, I've said this thing over and over again. Investors don't like uncertainty. They can price risk. They cannot price uncertainty.
Yeah, especially
and they will
political
sit
and things
it
like that.
out because there's no rush, right? These guys, you know, I mean, you go and get treasury bills at, you know, 100 bips. They're not sitting there sweating this, right? Especially for the kind of volume of dollars. So what the perception needs to change really is going to be driven by success stories. And these success stories have to be less hype and sort of more substance. And you run into this very fascinating dynamic where they don't want to talk about the success stories because the tax guy shows up. You know, so they like to operate below the radar.
Yeah.
So they're real success stories. There are some tremendous companies. But we've done, I think, as investors, we've said this over and over again when we have companies coming to pitch us. It's very simple. I want 300% year-over-year growth. Someone asked me one day, why that number? And I said, I need you to outpace two things, inflation and devaluation. And that number gets me there.
Last word.
I think we're only answerable to ourselves. If we try and create ourselves to please people outside to come into our continent, it's not going to work. We are responsible to our people, to ourselves, nothing else. If we do it properly, if we do it authentically, we do it properly, we do it with a long-term ethical mindset, everyone will come. And people who come later will kick themselves that they didn't come now.
Gentlemen, please rise and acknowledge the applause for a wonderful panel. That's your investment panel.
Well done, buddy.
Well done.
Mark, well done.
And that's my final panel. So thank you very much for inviting me to be part of this. Thank you.